Let's do this. My name is Slava Rubin. I'm excited to have you here for our latest conversation. I'm one of the founders here at Vincent. We are your platform to give you access and information for all things pre-IPO. We have our alternative investment report daily newsletter and of course our podcast Smart Humans, and we love to do these pre-IPO conversations, whether it's one company or an interesting topic. With us today is none other than the famous Jan-Erik from Sacra. Jan-Erik, say hi.
Hey, well, thanks for having me.
Absolutely. So today's conversation is going to be covering the world of health tech. We have talked about humanoids, we've talked about AI, we've had lots of requests about what's going on in health and how should I be thinking about pre-IPO. So here we are. We're going to be talking about the market, and we are also going to be talking about specific companies. So along the way, feel free to jump in and ask any questions that you may have. You can use the Q&A. I will do my best to try to incorporate your questions throughout the conversation, hopefully at the right time. And let's just dive in. First, a word from our compliance department. So nothing in this presentation should be construed as an offer to sell securities or a solicitation of an offer to buy securities. All investments involve risk and the possibility of loss, including the loss of principal, and neither past performance nor forward-looking information is a guarantee of future results. Now, before we get into this information and talk about the high level about the market, let's go to the next slide. Quick survey. How many of you are thinking to invest into a health tech company in the private world, in the pre-IPO market this year? Just give me a simple yes or no. So is health tech something that you're looking to invest into in 2026? Give everybody 20 seconds. Obviously, it's a bit biased of an audience since you are here for a health tech pre-IPO conversation. All right, three-quarters are saying yes. Awesome. I look forward to your questions. Let's close that. Let's move on. So let's start off with what is health tech? What is the market? What are we talking about? So I'll just start off with this one point just so people understand the size of the market. Sometimes people get excited about all these other tangential markets. Health in the United States is pretty much one out of every $5 that is spent in our GDP. So when you hear big valuations for health tech companies, it's not always because the tech is so incredible. It's because once you get market share, you can become very big very quickly if you actually get some momentum. Think about that. The GDP, if the US healthcare dollar spent on health was its own country, it would be literally one of the biggest countries in the world, only behind like China, the US, and maybe a couple others. And that's literally just the spend on health in the United States. With that as backdrop, Jan-Erik, what are we talking about with health tech?
Great point. Very much a huge, driver of spend in America, especially. Also a huge market for technology. And so most people know the name Epic Systems, which is probably the sort of biggest, at least privately held American kind of health tech company. They do about 5 billion a year in revenue, a little bit more than that. But this company was started in 1979, right? And all due respect, of course, to the business, I think that there's a lot of, you hear a lot physicians, frustrations with Epic. It's a very legacy, incumbent piece of software, founded about 40 years ago, jumping ahead in time. And so what we're seeing really coming out today in a big way is kind of a sort of new wave of health tech that is not necessarily taking on, kind of the biggies like Epic directly, but are sort of around it, adjacent to it, and solving problems with a lot of it with AI, which has really been one of the big accelerators because healthcare, like legal and other sort of more mainstream industries or verticals, have typically been a little resistant to technology, in terms of temperament or sort of regulatory restrictions. And so that's typically been a limiter, but we're sort of seeing right now that a lot of these AI companies are sort of short-circuiting some of those, some of those mechanisms that slow tech adoption, capturing doctors directly, capturing nurses directly. So a lot of interesting stuff is happening in terms of innovation in sort of the healthcare world, both in the hospital, the doctor's office, and your own home.
When you think of the categories, can you kind of break it down as, because the world of health is massive. How do you think about separating like the categories of health investing?
Yeah, for sure. There's a lot of ways you cut it, I think, but for us, the three sort of core categories that we've looked at are one is consumer health, so things that you're buying at home, and you know, this could look more like your Apple Watch, which you could say the Oura ring is kind of an evolution of that format and that type of product. A ring that you wear that tells you about your VO2 max and it tells you when you're not fully prepared for the day because you didn't sleep well, that kind of thing, but can also range up to the more kind of clinical diagnostic, something that you might have had to go into a doctor to get in years past, similar to like a function health. Function health is basically a blood test that will give you a range of biomarkers that tell you, what your overall state of health is. So that's kind of more of a, slightly invasive kind of thing that has become more productized over the last, 5 or so years. Then we have the more healthcare worker side, the more clinician side. So on the one hand, there's this concept of decision support. And so this is kind of where we put things like OpenEvidence, which are helping doctors make decisions and diagnose patients effectively, kind of like the ChatGPT for doctors. And then this kind of other segment of documentation. So this is stuff like AI scribes that are listening to a doctor, consulting with a patient, and then are not just transcribing that and turning it into, an LLM generated summary or transcript, but then turning that into structured data that can go into an electronic health record, be categorized and coded for billing and that kind of thing. So these are the sort of three categories. There are for sure others that we could talk about and look at, but for the purposes of this conversation, that's sort of how we're looking at it.
Yeah, I think that's super helpful. And just to kind of frame it, the three categories are basically health coming to the consumer, which is the patient, you, the individual, you, the person listening right now. How can you take control over your health? That's a big movement. We'll talk about that in a second. There's a lot of investments in companies in that space. The second is really how to have the doctor be able to help them with their job to do their job better. And the third is really around efficiency and really productivity. So it's really productivity that can be for any industry, but it's really productivity towards actually the health space. What we're not covering, two major categories, in my opinion, today is biotech. So being able to invest into the right next cholesterol drug or GLP-1 or the right next, blood pressure situation or cancer drug. That's a massive market. There's a lot of tech that can support all of that, but we're not talking about the actual biotech itself. There's software that can support all that. We would definitely want to cover that, but we're not discussing the actual biotech itself. And also an interesting category could be the robotics around health, right? Are we going to be replacing surgeons with robots and doing all that? We're doing less of that at this moment as well. So these are the major categories we're covering. Let's go to the next slide to talk about kind of the evolution of where this market has come from. So Jan-Erik, you want to give us a little bit of history?
Great. So yeah, I sort of start the modern health tech era in 2009 with the HITECH Act, which was designed to really bring American hospitals and doctors' offices forward into the future by mandating or providing steep incentives for using electronic health records, which were, at the time more new, more unevenly distributed in terms of usage. So this was a huge, boon for companies like Epic, but also Cerner, Athena Health, other electronic health record companies, because they were effectively subsidizing their adoption across the country. So now Epic is a giant. These other companies are also really big, and basically anyone in the U.S. who's been into the medical system has this electronic health record. So this, doctors was maybe not a, huge improvement, depending on who you ask, because it also created a ton of documentation time, a lot of time spent charting. After you're home from work, you might have to spend a few hours creating the notes and uploading them into your EHR, which again, very legacy incumbent system. So, there was sort of a lot of physician burnout, a lot of complaints about these systems being very time consuming to use, and not necessarily saving a ton of time. That said, next big
Really
wave in
quick to
20,
jump in there.
yeah,
I saw,
please.
sorry, really quick to jump in there. I actually saw that firsthand. My mom's a doctor since the
Mm.
80s, and I would not consider her the most tech forward. And when that EHR came out, the electronic health record mandate, that was literally my mother complaining about why can't it be the old way, where we just did it with paper and then the nurses filled in some notes or whatever, but having to replicate it all via, typing into the computer like this where my mother was very slow to do that. I definitely heard those complaints, but I do think fast forward, 15 years later, here we are today. It's that infrastructure that is able to leverage, to make things much faster. So thanks for sharing that, Jan-Erik.
Yeah, yeah, definitely the sort of the fact that electronic health records exist and that everyone has one, I think is definitely key. One thing we won't get into is kind of whether the control of companies like Epic over it and their integration or lack of integration, lack of open data is still sort of a delaying factor. But regardless, the next sort of big jump in time is 2020, where we have COVID. And COVID, kind of like the High Tech Act for electronic health records, COVID really accelerates telehealth, D2C platforms, all kinds of asynchronous care because suddenly you can't go physically to see a doctor. And so not only is there kind of the human incentive to seek remote care, but there's also a bevy of regulations designed to make it easier to get care remotely and to get things prescribed remotely that you wouldn't have been able to before. And this was massive for companies like Hims and Hers, Row, which don't factor into our initial categories, but we'll talk about ED, hair treatment, fertility treatment, all done remotely and has been a huge cash cow and a huge sort of shift in the way that medicine is done. Even now, obviously, a lot of that stuff is still, years later, is still very common to do remotely rather than in person.
Yeah, and
And yeah,
you're seeing this amazing convergence now where the tech is getting more advanced with the AI. You're seeing telehealth become the norm. You're seeing the personalization of trying to do better by individual. Costs are still going up, but now you're seeing this rise of trying to own your own health, which I think is like a pretty new concept. Again, back up to the 80s, the 90s, even the early 2000s, that was never a thing, right? You either were healthy or you became sick, and then you dealt with being sick. Rarely did we try to prevent anything or try to get ahead of it, and that's really becoming a little bit of the movement in the last several years. Is that why we're starting to see more dollar flows into this space?
yeah, I think so. I think, since sort of the Obamacare incentives around preventative care, I think that has sort of seeded the idea. But then, yeah, we're definitely seeing a lot of that, especially now with GLP-1s, which I think are sort of in a way like, it's a drug, but it's also the ultimate kind of preventative um, against so many of these conditions that come along with, high blood pressure, obesity, diabetes. And so I think that I was going to mention too with digital health 2.0, COVID era is kind of now really the ultimate because uh, ED, hair, fertility. I think GLP-1 is bigger than all of those in terms of what we're seeing in terms of volume of people being signed up to again either address a urgent acute condition or be preventative, and also remote volume. So all of those Hims and Hers, Row, all the other players doing D2C telehealth have seen a huge explosion of revenue from GLP-1s, prescribing GLP-1s.
Those companies that you mentioned, a lot of them raised a ton of money in early COVID, like you mentioned, the 2020, 2021 period, even 2022. In aggregate, the private dollar flows into health tech has been going down since COVID started. But then you see actually an uptick. You see an uptick for the first time this year. Why do you think that we're seeing an uptick? Is that just is that the AI dollars or what other dollars is it?
Yeah, it's a good question. It's partly AI. Uh, most of it is AI, and then I think some of it is along the lines of telehealth. Although I think a lot of those players raised, as you said, they raised enough sort of in 2021, 2022 that they're not driving a lot of it. I think for the most part, if you look at the increase from last year, it's a lot of it is AI.
Okay, great. So again, if anybody has any questions, feel free to send them into the Q&A. We'll incorporate. We want to give everybody some backdrop on the market we're talking about, and now we're going to dig into four specific investment opportunities that you could consider. It's not exhaustive of all the opportunities, but we're going to dig into these four. So let's first start with Aura. I have my Aura ring on right here. I personally have
Very
been a
nice.
customer for something like 7 years, which is quite remarkable. I practically from the beginning. So, yeah, tell us about Aura. What is Aura?
Yeah, so I think Oura began, I believe, as a Kickstarter campaign about a little over a decade ago, and the ring has been through several iterations since then, improving the hardware and software side of it. So today, and add anything if I forget anything here, it tracks your sleep, your kind of readiness for the day. It tracks your overall activity, your stress, those being kind of the key things. Then there's kind of one of the big features recently has been women's health, so cycle tracking and ovulation prediction, which apparently this has been the fastest growing segment at Oura. So yeah, today the ring goes around $300-$400. There's a small monthly subscription attached. They've sold over 5.5 million rings, and yeah, they've just been consistently doubling revenue every year since 2022, and we just recently saw that they hit roughly $1 billion in revenue in 2025. So yeah, valued at 11x. I think yeah, there's a lot of interesting stuff in terms of sort of the tech side of it, but I think yeah, the the key thing is kind of integrating into your life, being able to tell you all these kinds of things about yourself. From a basic level of sleep and activity up to kind of the more a little bit more high resolution, fine grained stuff like if you're trying to get pregnant, helping you track your cycle. If you are pre-diabetic, they now have this kind of glucose data integration with photo logging in the app so that you can track your diabetes. So getting a little bit more intensive with some of the workflows they can help you out with. I think that's kind of the key thing that's differentiating them from some of the other smart rings in the space.
Yeah, I mean, I would put this in the category of like the Internet of Things, like an IoT device that is helping you be healthy, right? This could be Whoop, this could be 8 Sleep, this could be a Fitbit, this could be, many different things that are out there. We just happen to choose this company to highlight for this space. We think, it's one of the most interesting and also has a pretty significant valuation. I mean, they just recently raised at $11 billion. I mean, that's not 380 billion Anthropic numbers, but just a few years ago, 5 years ago, we were impressed by an $11 billion valuation company. Nevertheless, this is literally quote unquote just a ring. And the fact that they're doing $1 billion of revenue is pretty impressive. I know that they're looking to evolve from hardware to really being much more of a subscription product, which they've slowly been evolving with. Why do you think the jump in revenues from, they're already doing nice growth in 2021, 22, going from, the 100% growth, 70% growth, small growth, and all of a sudden, these huge growth numbers in 23, 24, 25. Any opinion on that?
Yeah, it's a great question. I think they've been really well positioned for they could never have predicted, right, that they would be sort of launching and 5 years later they would be sort of worldwide epidemic that would instantly make billions of people very conscious of their health and wanting to track their health, and then would also make it remote care such an attractive option. And so I kind of see it as a outgrowth of this wider interest in kind of health, you know intensive health monitoring, intensive health data, and also so because I think a lot of it is just sort of adoption, increasingly finding adoption within the market versus like upselling, dramatically upselling their existing customers, which I think there's been some of that in terms of the monthly subscription costs and that kind of thing. But, 80% of the revenue roughly is from, kind of new hardware sales. So it seems to me that they're just sort of riding this wave, continuing to expand. More and more people kind of want this data about themselves, and that seems to be driving a lot of it. I mean, there is also some kind of B2B partnership stuff that's very interesting, but yeah, that's kind of how I look at it.
The Dexcom investment is super interesting. I mean, Dexcom is a public company, focused a lot on diabetics and continuous glucose monitors to try to really help people stay healthy for as long as possible. They invested $75 million. I believe it was at the 5.5 billion. I can't remember if it was at the 5.5 or the 11 billion. That's a pretty huge partnership to be able to then try to use the Aura combined with Dexcom. Start doing that with, photo logging meals and calories and glucose. You're starting to really get to know the patient or the customer. How big can Aura become? Is this a good entry point at $11 billion dollars if you could get in? Are we talking about potentially a $100 billion company, or are they already pretty expensive?
One thing also that I wanted to say that I forgot is that they went into Target and Amazon in 2025. So they became suddenly a lot easier to buy, and a lot more visible. But yeah, I think to look at the Dexcom thing, I think it's, yeah, clearly getting into a use case that has higher retention, higher value, because not just sort of you're not just sort of talking about getting data on your sleep for peace of mind or for self-improvement, but really a real-time kind of nutrition glucose coaching use case, which is something that has both the higher value B2C skew and also has a sort of B2B potential where companies already spend tons of money via their insurance on programs to help people on their teams with diabetes or prediabetes. And so I think it opens up a potential kind of, more of an enterprise play potentially for them to go after. But yeah, I think in terms of valuation, I feel like maybe slightly biased because I'm also from Finland and Oura is from Finland, made up of a lot of ex-Nokia people on the hardware side. And so it seems to me from the outside that the ring continually has improved and the data seems to be improving. The revenue is doubling every year. And I don't think that the health obsession, that people have with data is going anywhere. So my impression would be, that it would be good to own. But as the user in the chat, I'd love to hear what you think.
Yeah, I mean, I think it's a solid product. I think that they're doing a great job to add subscription. I think that's going to make their valuation much more attractive. Keep in mind, they're already doing $1 billion of revenue. A bunch of that revenue, 80% of that is lower margin as hardware. So 11x multiple is not a very expensive multiple. So it's easy to say 11 billion is expensive, but 11x multiple is actually quite cheap. I think you said it right, which is the obsession around your own health is not going away. I think that momentum is only speeding up. And I think the actual physicality of the ring as a central focus of trying to have that interaction with the data is going to keep getting momentum. I don't know if they're a standalone company 10 years from now. My guess, if I had to be put on the spot, is they are not. But could they become on the way to a $100 billion company along the way? I think it is possible. But I do think an Apple, United Health, potentially some other company in the pharma space or others would potentially want to pick them off as a huge M&A opportunity in the tens of billions of dollars. But who knows? Could they become a $100 billion company? I think it's possible, but I don't think it'll be super rapid. But they are not the most expensive company right now, so I do think it's interesting. All
Yeah, I
right.
love the Oura idea, the Apple. I think that those two, very similar kind of, branding.
All right. We do have a question on Oura, but do they have plans to address how to make the data applicable for actual care? It's interesting, this opportunity to, because right now they're not using the data directly towards the healthcare, right? Trying to tie it closer to the healthcare opportunities and trying to be proactive and reactive with the Aura data to actually turn that into part. Because imagine for a second you combo some Dexcom, some Aura, some function, right? You tie that right into your actual primary care and you throw in an AI voice bot that tells you what you should be thinking about, or almost like your concierge medicine doctor via AI talking to you each day. I mean, it's pretty exciting. right? Will any one company own that? I'm not sure who's going to own that because it needs to be stitched together. But I do see all of this data with the AI and personalization stitched together to be a much more interesting personal health experience 10 years from now. Now, that could be 3 years from now, but for sure, 10 years from now. Let's move on to the next company, Abridge. This is definitely in the camp of improving the efficiency of the doctor. And this has been a rocket ship. Talk to us.
Yeah, so interestingly, Abridge got started before COVID. I think AI scribes have become so associated with post-COVID doctors' interactions, but it started before COVID as an app on your phone, actually for patients to use, that when they talk to their doctor in an appointment, they can record it. And then the recording will be, transcribed using their own kind of, this is pre-LLMs, but using machine learning models that are trained on healthcare to help you remember what to do, basically. Then they sort of went the other way during COVID, went to the doctor's side and became a AI scribe. Because like we were talking about with sort of V1 healthcare tech, one of the big issues was the amount of human manual data input that was happening, taking up hours per day. And so AI scribes sort of presented this new product market fit around AI transcription of conversations, turning those into the notes so that you can, instead of having to type all these notes and put them into your EHR, you can just copy and paste, or have them sort of, auto sent into the EHR via this AI scribe. And so that was Bridge's sort of key shift, got them from, 2 million around the time, around 2022 to, 100 million as of last May. So obviously, yeah, we've seen this across a lot of these AI scribe companies, but Abridge has been one of the fastest growing for sure. And yeah, sort of in comparison to some of the other ones, they've gone more enterprise. They've made a deal with Epic to be a sort of preferred partner of Epic, which gave Epic an equity stake in the company and ongoing revenue share, which is important. And then, yeah, so they've been able to sort of get into some of these giant hospital systems like Kaiser, the Mayo Clinic, and they have been able to sort of make themselves the default AI documentation tool in a lot of places.
So people are familiar with like Cursor and Replit. Let's call that like the vibe coding companies. Those companies are on fire. Um, I heard Cursor is like potentially gonna be raising at a monster round soon. I would put a bridge and these AI scribe companies like almost like the health tech version of those companies, where it's this wrapper on top of AI, and then they're targeting specifically this health tech focus. These guys went, like you see in this chart, from $6 million run rate in 23 to $100 million plus in 25, which is crazy. Um, what do you think of them at a $5 billion valuation?
Five, I think it's interesting. My concern is maybe roughly revolves around the fact that there are so many AI scribes
That was
now.
literally going to be my next question. That was literally going to
Yeah.
be my next question, which is, it seems to be somewhat of a commodity. Commodity may be too aggressive of a word because each one's going to say they're better than the other one. But how do they retain this valuation and this growth if there's 10 others or 50 others out there?
Yeah, exactly. I think it is. I mean, it was such a compelling pattern of product to build during early COVID that a lot of people built the exact same product. And it also just played so well off of sort of the inherent strengths of LLMs. And so that's why you had a bunch of iterations of this product come about. The main Abridge difference has been this partnership with Epic, which made them, from 2023 onward, kind of have this pride of place, in the Epic marketplace and the Epic store, and has been key to these enterprise sales that they've been able to make.
You're
Now,
raising a great point
yeah,
here, which is you're not saying this directly, but in health, often if it's not the biotech, which is full on new science, it's rarely the tech and the innovation that's breaking through. It's about having the distribution, right? It's about having that killer way to get distributed into this gigantic, enormous market. So with Aura, somehow they built it bottoms up onto people's fingers, and now they have this massive distribution network, which has huge data, et cetera, et cetera, et cetera. So if they want to push new product or new features or new prices into that, they can do that. And here it was somehow getting access to Epic. Again, Epic is 800-pound gorilla. The company's been around for 40 years and kind of owns the electronic health record in the United States. So they have this huge partnership, which is very difficult for most to get.
Absolutely. I think that early on it was huge. Um, again, this partnership was in 2023, so quite early on after the sort of ChatGPT moment. We have, sort of heard, if we go back at the time, Abridge had a deal, Nuance had a deal, which was Microsoft. And so Epic had really deep pockets, was able to give them this great head start on enterprise sales and help them get into all these other hospital systems, which, like as you gestured to, it's very hard to do if you're just a startup to sell into Kaiser Permanente because you are dealing with right off the bat these very long sales cycles, tons of compliance lift to get in a position where you can even start selling into these places. So yeah, it's a huge advantage at the time. What we've sort of seen now or shifted over the last year, which makes me a little more concerned about Abridge and not having inside information. Epic seems to own a lot of the equity of Abridge. Abridge pays them big revenue share, and they were a development partner early on, but now Epic has their own AI scribe as well. Abridge also offers integrations with a bunch of other AI scribes that are out there on the market, including Nuance, which is part of Microsoft, and a bunch of other ones. So I guess the way I see it is that sort of Abridge, made this deal with Epic, but Epic has other partners. Epic has their own AI scribe, and so it's hard to say at this point, is it beneficial for Abridge? They're slightly behind, they're slightly ahead of their competitors because of the integration, but at the same time, it's not a super exclusive integration anymore, particularly.
Yeah, I mean, the interesting thing about Abridge and really this entire AI scribe market is it's becoming such a commodity and such a demanded product that I think you're going to see it almost like as a loss leader, where more and more the scribe product is going to try to be the wedge into that customer, i.e., the practices, the doctors, etc., the hospitals. The goal will then be to get other higher margin products so you can sell a suite of products to the end customer. The challenge is, will you be able to actually get away with that as the AI scribe, as the loss leader, as it becomes competitive, and you try to layer in all those other products? So really, I think you need a bridge to become kind of a health tech super app for it to become, let's call it successful and to be able to retain this value. Otherwise, whether it's Epic or these other players, I am concerned that there's going to be a little bit of the commoditization of that scribe product. Um, this story is definitely has chapters to go. I do think it has a chance to become a monster company, or there is potential that it erodes at its revenues because all these other companies keep on nipping at different parts of it. Any last thoughts, Jan-Erik?
No, I think you're completely right that it's part of a platform and not necessarily a standalone business, the AI scribe function that is. And so we are seeing all these players building out billing and things like that we'll discuss later as we talk about the future.
All right, awesome. Let's go on to the next company, OpenEvidence. Super interesting. In short, people are calling this ChatGPT for doctors. So talk to us.
Yeah, so OpenEvidence was founded, again, another one founded pre-ChatGPT and was doing AI, specifically doing machine learning models that were trained on healthcare. And so the idea was this was pre-LLMs was to be able to use AI to help physicians make diagnoses and think about treatment by generating actual answers that you can trace back to citations in medical journals. Now, ChatGPT comes out, LLMs are more popular, and the product has taken a huge leap from there, both on the technical side and also on the sort of awareness, interest in using this kind of tool side. Today, OpenEvidence is, like you said, kind of like the ChatGPT, kind of like the Google for doctors, where you can type in a very hyper-specific scenario with a patient and get answers back synthesized from medical journals in sort of the top American and European medical journals that are out there, which OpenEvidence has exclusive partnerships with to use. So I think that's key for sure. And then they monetize on ads. So with all this discussion of OpenAI putting ads in ChatGPT, it's been working very well for OpenEvidence, growing to 150 million in annualized revenue last year from about 8 at the end of 2024. And that's virtually all from ads, which can be incredibly lucrative in the sort of pharmaceutical medical device world. You can get 4-figure cost per million impressions or 1,000 impressions. So yeah, very interesting business in this space.
Why, just to double click on this, why can I just not use actual ChatGPT or Anthropic to get the same answers?
You can, and we'll talk about that. And I do frequently to get health questions answered. But if you are a medical professional with sort of someone's life on the line, first of all, you're not supposed to type that stuff into ChatGPT as a doctor just because of HIPAA and other reasons, putting in patient information, that kind of thing. So while doctors do it, the other big reason why is because the citations are not, if you sort of think about medical grade, you want to make sure that every assertion is backed up by peer-reviewed data. And that's really what OpenEvidence has indexed on in a big way. Anyone can go to their website and actually try it out. And I did this and saw that the citations are much more, in depth, much more detailed. And then also ChatGPT and Claude don't have access to the New England Journal of Medicine papers and that sort of thing. So if you want to get the best answer and you're a doctor looking for information for a treatment, this is where you would go.
So this one has the highest multiple, 80x. So using that bar, it's the most expensive of the companies we've spoken about. What do you think the potential for this? What does this look like 3 years from now, 5 years from now?
Yeah, I think, they're the most kind of, highly valued. I think also probably by some margin, the highest gross margin business here because this is pure software. It's the closest thing in health tech today to kind of looking at Google's business model in the early 2000s, where you're just selling ads against queries. The difference here is you have basically only high value queries, no low value queries basically, although you do have the additional cost of the machine learning models being used to generate the answers. But yeah, I would imagine that the trajectory could look somewhat Google-esque in that you continue to grow the advertising machine and the advertising machine subsidizes your expansion into these adjacent product areas, which we've seen them already launch a dialer, which is basically a HIPAA secure communication tool within their app that lets doctors call their patients and do voice messaging, do voicemail, which is basically because doctors don't want to use their personal phones to do this stuff. And then the other thing is actually AI Scribe. So they've launched an AI Scribe, and to talk about that being a feature. And I think
when is your AI Scribe coming out? No, I'm just joking.
The Sacra AI Scribe. Yeah, very soon.
Yeah, exactly. Let me throw some cold water on this one, which is, what if in the next few years, Anthropic, ChatGPT, and others just say, you know what, this is a great market, let's copy paste, and this gets commoditized away. Is that going to happen?
I think it's possible. I think clearly ChatGPT is going strongly on that, and Claude recently launched, Apple Health integration, so they're a little bit more, slow going, but ChatGPT is definitely going after it. I think where I think it'll end up is that ChatGPT and Claude will own a lot of the consumer side, will own a lot of your health questions that you have at home. Maybe divert a lot of those visits to healthcare away. But it seems unlikely to me that they're going to go after doctors in this way. I think there seems to be a lot of resistance from healthcare professionals. Some of them are even skeptical of OpenEvidence, but they've really won people over a lot with their sort of partnerships with New England Journal of Medicine and others, and with the citations, and that overall sense of trust and reliability that creates versus OpenAI and Anthropic, which do have a reputation for hallucination and all this kind of stuff. It's optimized more for consumers. The partnerships, it's worth mentioning, emerged because OpenEvidence showed the New England Journal of Medicine and others what they were doing and said, basically, do you want your stuff to be, synthesized in ChatGPT, or do you want us to be the only ones able to use it? And so there's a bit of a non-transactional, cultural like reaching for reliable, trusted data that has driven those partnerships where the journals of medicine want the highest quality information out there. They don't want OpenAI and Anthropic using it. And they were offered, I'm sure insane amounts of money by OpenAI and Anthropic to be able to train on their stuff, and they refused it. So I think there's some institutional, cultural safeguards there, in addition to the business model question of, is it big enough for them to really go after? Not sure, but that's just my take.
Perfect segue to the next company, which is actual OpenAI, ChatGPT, focusing on health. So if we go to that next slide, do we think that maybe we should be investing right into OpenAI at $730 billion valuation? Amazon just put in 50 billion into that round. Should we throw in a few bucks also? Is that the right move? Focus on health?
I mean, I wouldn't say no. I think especially if you use it for health, then you know that it might not be perfect, but I think it often, for me, the main competitor or the main disruption that will happen in the short term with ChatGPT health is things like teledoc, and I think that those doctors and nurses that you contact on that, on remote care bundled in with your insurance or whatever, they still clearly serve a purpose in terms of the compliance of getting a sign off on a prescription, or what have you. But ChatGPT health, Anthropic health, I think as they get better, the um, the potential for those to sort of handle a lot of these like frontline ailments, and deflect away from actually making a visit to a doctor, or an urgent care or an ER, is pretty huge. And um, we're seeing that from a lot of D2C healthcare platforms that are launching their own chatbots. And so I think that's a really interesting use case. We'll see where the sort of enterprise offering goes. Could be interesting. So I could be totally wrong on OpenEvidence, but I do think on the consumer side, it'll be big for sort of personal health.
Do you think the OpenAI for healthcare is just going to be the experience we see today, or fast forward a year or two from now, is there going to be a completely different entry into OpenAI trying to compete with an OpenEvidence or a different experience which is HIPAA compliant, et cetera, et cetera? Do you think there'd be a different entry into OpenAI? I'm just asking your opinion.
Yeah, I think it's tough because they don't want it to be Perplexity like, where you have a bunch of different, products. I think that they want to keep it sort of unified. And that is also part of what makes it challenging to do things like healthcare, because you need a lot more citations. You need a sort of different looking answer, I think, to do that right. Same with shopping and other kinds of things. So I think for doctors, as they do kind of push into the enterprise healthcare space, I think that that's going to be a different looking interface for sure. And then I think for consumers, yeah, it'll be interesting. My bet would be that it won't be. It'll just be in ChatGPT. You'll go to settings and connect your Apple Health, connect your Oura Ring, connect everything, and then it will be able to give you contextual answers in ChatGPT about your health. I would be surprised if they went and built out their, a separate app or even a separate, sort of screen on the website.
Awesome. Let's move on to discussion about the rest of the market, just to give a little bit more about the ecosystem and other players. Before we go there, just really quickly, Jan-Erik, to put you on the spot, we covered four companies: Oura, OpenEvidence, ChatGPT, obviously OpenAI, I mean, and then Abridge. So give me your ranking, one through four. Which one do you invest into first, and which one do you invest into fourth? One through four. Give me your ranking.
Yeah, I think for me, OpenEvidence would be, uh, yeah, maybe
At this price,
OpenAI.
meaning each one for their respective price.
Yeah. I think OpenAI probably first, not necessarily for the health specifically, but OpenAI, ChatGPT, then OpenEvidence, then Oura, and then Abridge last, I think.
Got it. So first was OpenAI for you.
Yeah, I think so.
All right, I'm gonna be provocative. I'm gonna put OpenEvidence first because much higher potential for return there. I do think OpenAI has a chance to be a $5 trillion company, but that's only a 7x from what we're talking about. Give me a 7x on OpenEvidence. We haven't even hit 100 billion yet. So a lot of room to run there if possible. I think a bridge could be really interesting. has a chance to be a $100 billion company. I just am concerned about the competition. Oura, I think, is maybe one of the, let's call it, safest bets, where I think the floor is maybe the highest, but maybe the ceiling might be the lowest. But I think Oura could be a surprise. It's interesting. I like how we're pretty similar but different. So give us a little bit more color on the ecosystem. What else is there to look at? How should we think about finding new opportunities?
Yeah, in AI scribes, I think, one of the interesting companies we looked at a few times last year and the year before was Freed, which Freed is very similar to a few other AI scribes like Heidi Health. And their key differentiator has been that they haven't gone into the big hospitals, big medical systems, which, like we said, huge, long sales cycles, very difficult to get into. Rather, they've been targeting individual clinicians and kind of like practices of three or fewer doctors. And what we've sort of seen is one of the first strong examples of this kind of product-led growth in healthcare, which is usually doesn't happen. Clinicians not being crazy about paying for SaaS software, but it has happened with Freed, with Heidi Health, with a few others, and yeah, obviously that is a space with even more competition than in the sort of enterprise ambient scribe world, but still interesting to watch to see if they can sort of go up market from there. And then consumer health, I think this is what you were talking about with regard to an operating system for your health, something that can bridge your, your kind of daily stats, daily metrics from your ring or from your watch with kind of more intensive studies, blood tests, MRIs, that kind of thing, and put it all together and tell you what's going on with your health. And so they're one of the companies that is really going hard after this, from the biomarker blood test and MRI side. And yeah, then the sort of last category, DSC telehealth. I think one of the companies that we've looked at recently is Row, which had sort of post-COVID actually flattened out. Doing ED, doing fertility, doing hair, remote care, had sort of been somewhat tapped, and GLP-1s kind of came along at the perfect time, and they almost doubled in revenue just in 2024. And in contrast to a bunch of other players in that space, they have a kind of vertically integrated stack. They have their own pharmacies, their own labs. They do in-home blood tests to get you ready to go on something like a GLP-1. And so they're making a huge play to own that segment of D2C telehealth, especially with GLP.
And this is just a selection of the potential companies. We had a question about which of these are available to invest into today. These are all private companies. Obviously, you'd have to figure out how to get into them via secondary or directly on the cap table into the next round or through somebody who already owns some shares. So that's a completely separate conversation. Obviously, you can take a look at some of our other episodes we've done about how to get into private companies. I'm personally biased here. My fund is one of the first investors into Hone Health. So just putting that out
Nice.
there. All right. Let's finish up with some predictions for the future.
Yeah, so I think we've thrown some cold water on AI scribes. I think the sort of necessary thing to talk about on the other side is how they are a very compelling wedge product into hospitals.
Absolutely.
And basically the point is when you are selling SaaS into almost any industry, it is great to be near to the point of payment. And when you're selling into a hospital or healthcare clinic, selling an AI scribe actually does help you get closer to the point of payment and into the transaction flows, which we started off talking about, right? The amount of money spent on healthcare is, utterly insane, and AI scribes are getting very close
Sorry to
to it.
interrupt, but in case people missed it, one out of every five
Mm.
dollars in the United States is spent on healthcare. So just to double click on what Jan-Erik just said.
Yeah, exactly. And so these notes that doctors take are very important for billing because it's the conversation and the recording of what is being done in a clinical way that ends up being coded, which is basically applying the insurance relevant tag to everything, and then being submitted for prior authorization to the insurance, and then plays a part in billing, and then plays a part in actually getting paid as a medical facility. So what we're seeing so far is, for the most part, these players in AI scribes are not just trying to build a business on AI Scribe. They're trying to move into the, sort of revenue cycle management, making sure that doctors are getting paid for the procedures that they're doing, making that as easy as possible, and then, sitting in the middle of the transaction flow, which gives them sort of a place to add that to their business model, right? Taking a cut of transactions, which has the promise of being, I think a giant business.
Yeah, I mean, I think that the health industry has been somewhat slow to adopt technology for the previous decades. I think that has all been infrastructurally been built up for what's happening now and for the next decade. I'm actually very, very excited about the changes that are going to be happening. I would not be surprised if each one of us has our own concierge doctor who's calling us every single day or that we're interacting with every single day, but that's actually AI, and that's connected to the various things that we're eating or our movements or our personal data. And we're able to just try to keep ourselves proactively healthier, which is net net very positive for everyone. So I think I'm very bullish on the market. The challenge as an investor is to identify which are the right companies to invest into that will be able to scale into this and not get commoditized away. So I hope everybody enjoyed this session. We covered a lot of content. It's a really interesting market. And Jan-Erik, as always, thanks for being incredible.
Thank you for being too kind.
Have a good rest of your day, everybody.